GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar. So some big moves in the US dollar on Friday. The US inflation data came in hotter than expected, and we saw some big moves down in euro dollar, in sterling as well, a pop higher in dollar yen, and some smaller moves in gold and silver, which is interesting, shows some strength there. The S&P 500 finished the week at record highs, but not so much action of late in Bitcoin. So if there are, as usual, any other charts you want me to cover, then please do drop a message in the video, and I'm always happy to do that. Otherwise, click that like button, click that thumbs up. That really helps us get more viewers and keep doing these videos. All right, so let's have a look at the euro-dollar currency pair. So this is a huge bearish engulfing candlestick on the daily candlestick chart. It took us right from resistance right down to support. And actually midweek, if I drop down to this 4-hour chart, you can see that this supply area caused by this initial big drop over here actually worked pretty perfectly, almost to the pip. It actually, a couple of pips higher. And then just plummeted. But it was a confusing situation, and I was thrown off by the fact that we'd already tested this supply area 3 times, you could arguably say. Then we got a breakout here, but it turned out to be a false breakout. So it's just one of those things where if you'd been playing the breakout here, it was risky to the degree that we'd just seen a sharp move straight up. And the market was already a bit exhausted when it got to this breakout area. So with the benefit of hindsight, it probably would have been one of those examples where when you saw that this candlestick closed back below the breakout area, then you would have been getting a little bit more cautious. And certainly by this candlestick, when it tried to push back higher again and then failed, at this point you knew it was a false breakout. And so hopefully any attempted breakout trades could have been limited by closing out the trades down at these levels. Now we find ourselves obviously right back at the area of support. I think this is the way to think about this setup at the moment. That's a very bearish candlestick on the daily candlestick chart. It suggests prices are heading lower. We're back below the 20-day moving average again. The overall trend in euro dollar is down. And just a side point is that according to COT data, big speculators are very long the US dollar at the moment. So, basically the hedge funds are long the dollar. It's a little bit of extra information on the side to think, well, probably we should be long the dollar too. But for me, I think the way to think about this large candle is that even if we do expect another sharp drop after this candle, it's still just not a great time to be selling right into support. So even if we think prices will drop again, the risk to reward of all this price action here, of having to, if we just don't know how far it could bounce, how far the price could bounce into this area before it drops again, just means that it's just not a great entry point. Even if we think, it's one of those, when you're thinking about a trade, you're thinking about the direction the price is likely to go based on support resistance, your other analysis, but you're also thinking about the risk to reward, how much am I risking versus how much is the potential reward on the table. And if you're risking anything in this area, then basically you're predicting a very large price move. And actually, that major support that we'd previously highlighted is just down here. So the price can obviously make a large move lower, but there is a bit of a major form of resistance and support down here to suggest maybe it can't. So all put together, I think even if we think probably prices can drop, and we've certainly see instances like this candlestick here, a big daily drop and then another one. But equally, you can see big drops and then you get a bit of a bounce the next day, and actually the price turns around, or a big drop and it takes a few days to get back down to that level again. So it can be any number of circumstances. So you don't have to jump straight on the trade and try and sell right at the lows because you're worried it will continue. That could happen, but you just got to think yourself that actually better just wait for a bounce and get a better risk to reward, even if it does mean missing out on the move lower if it happens straight away. Well, let's change gears to the British pound, and we sent this chart out in the daily article on Monday. It's not a perfect example of the trend line. You can see that actually if you draw it right through the highs, this price action didn't quite reach it. Maybe it does on some price somewhere or other in the Forex market, but you can see this is the general trend of things. You can even try and draw something a bit rougher through this peak over here, draw it through kind of through the closes. And again, you can sort of see it hasn't quite reached, but this is the general tendency that's dropping away when it gets close to this resistance. So again, another bearish engulfing candlestick on the daily chart. It didn't, take out the high, but it doesn't need to meet the definition of bearish engulfing. The black body of this last candle easily engulfed actually several bodies before it. 1, 2, 3, 4. Engulfed 4 previous bodies. So quite a powerful candlestick. And you can see from the 4-hourly chart that it took us through this area of support, which is about 37.20 or so. So that what was support is now the resistance, just above 137 really. And you can see the market did pop up to 137, tipped that 20-day moving average and has tried to roll over from there. Again, not much of a bounce, and you could see this market action just dropping away again, but risk reward says maybe try and wait for a bounce back up to the actual broken support. It offers slightly better risk to reward opportunity, but certainly the dollar looks strong right now. Obviously we've got the Fed this week, who look like they're going to announce tapering at last. That means less printing of dollars, less devaluing of dollars, so each dollar should be worth a bit more, and the markets are revaluing the dollar higher ahead of that event. And then on Friday, of course, we've got non-farm payrolls. So lots of dollar risk, lots of interesting stuff for the Forex market this week, and hence some of the picked up volatility, which is obviously great for us as traders. We want to see these big price moves the quicker the price moves in a period of time, then the more opportunities that you have. Okay, so that's it. The outlook has turned bearish on both the euro and the pound, but we're right at the lows, which is typically not good risk reward time to sell. Maybe we need another drop and then a bounce after the next drop to offer the new opportunity. Okay, switching gears, obviously this is dollar strength coming back into the equation. Dollar yen has held on to this, we were calling it a potential neckline if that's a shoulder and that's a head and that's a shoulder, but it seems to have snapped past that. It certainly held this support. The neckline could have been something like that, but it tried to break through a couple of times, and the failure of a bearish pattern is always pretty bullish, and that's why we see several periods of strength here. And this line, if you're wondering, is the kind of major weekly resistance that we talked about last week. So a move up through that 114.40 to 50, say, and then a move up to test 115 it's quite a big deal in dollar yen. It's certainly a shift taking place. You could sort of we've drawn in this trend line before. We drew it at the time. A big long period of downtrending action in dollar yen, and we've sparked out to the upsides here. So we're against a major resistance. We've consolidated a bit, but it looks like the market doesn't need to consolidate for too long. It's trying to break to the top side here above 115. That's the big picture. And then in the short term, we've got this failed head and shoulder top potentially, and we've just got this support holding and a move up to the resistance. So it looks like a breakout's on the card in dollar yen. Which is in keeping with this general theme of dollar strength going into the Fed and the NFP. All right, switching gears to gold here. So this is the daily chart, and we're basically still in this range-bound action, but we did get a sell-off, obviously, in gold, just like we did those major currencies as the dollar strengthened. It wasn't as it wasn't as strong, and now gold is considered an inflation hedge, and there's lots of concern about inflation, and it was that inflation data from the US that strengthened the dollar. So if people are getting worried about inflation, then actually historically you buy gold to protect against inflation. So I think that explains the dollar strength, explains the fact that gold closed lower, but the fact that it didn't do on a relative basis as bad as some of the major currencies is probably explained by that inflation hedge aspect of what gold does. So still in that 1830 to 1720 range, but potentially, the best selling opportunities are obviously always at the top of the range when you're in a range bound environment. But it does seem like this interim form of support, then resistance again, has held, and now we've come down. On an intraday basis, we broke below, and we're challenging 1780 as this short-term support, which you can see better on the 4-hour chart. So, in a way, a triple top with a breakdown through the neckline. These things never work quite perfectly, but if you drew something like a sloping neckline, you can actually sort of see that we bounced up towards it and then potentially rolling over again. So we've had a bounce off the lows. It's not like you're selling at the lows here. And one last point is that the RSI resistance, which I believe is at the 60 level, has held again. So it's a range bound environment, but actually short term, it looks like we put a triple top in and gold's rolling over, potentially back below its 20-day moving average. Silver looking relatively much stronger than gold, but it's still, it looks more like a correction at the moment, because the bigger picture is that we had this inverse head and shoulders. We rallied up through this pretty well-defined trend line, rallied up through there, but obviously we just banged into that old high. We talked about this last week, and fairly textbook, we dropped back down to the old high. So you can see this has happened before, where this was the neckline of the inverse head and shoulders. We broke out, actually touched that trend line, came back, tested the neckline, then rallied up. Now we've hit that old high, we've come back and we've tested this former high here. So we had this high. Obviously, the market kind of came back, rallied from there, but eventually it kind of broke down through there. Now we're back at this high. So it's breaking supports at the moment in this correction. But overall, we had that big break from the downtrend line, and we're above the 20-day moving average. So still kind of bigger picture. It's like a correction for silver, and kind of waiting for some opportunity to buy some end of this correction. So silver looking a little bit more optimistic than gold, but maybe silver does just eventually roll over with gold, and you could see that potentially happening. This was a kind of sharper downtrend. We've got a bit of relief from the downtrend, but still technically the downtrend's in place. We haven't made a higher high, and the last thing we did was make a lower low. So it may just be that the speed of the downtrend gave way for a moment, but maybe we're just going to head straight back down to 22 support again. So silver looking bullish, and kind of in a way it's a useful scenario where you're a bit bullish on silver and maybe more bearish on gold. They're highly correlated, so if you can be long and short them both at the same time, you're kind of hedged. But obviously you don't want to be placing perfectly opposite trades, so that's pointless. But if one's a bit shorter term, one's longer term, or different ideas behind the trade, then that can be a good thing. Okay, so switching gears to oil. So I'm still making the error of trying to pick a top in oil. Something about this trend has just been so relentless that it's been very tempting. Clearly buying the dip has been the best strategy in oil for a while now, at least going back to the August low. What we're potentially dealing with now is an interesting signal from RSI, which has got me interested here. The RSI lows have been upward sloping alongside this rising trend line. The trend line hasn't worked perfectly, but it kind of through these first through lows, vaguely through these, up through these last ones, and also alongside the 20-day moving average. Is this a believe it's the 20. Yeah, okay. 120 on the 4 hour tells us it's about the 20 on the daily in terms of moving average. So you can see this line that I've drawn here, potentially a scenario that we can look for here. If I zoom in a bit, is that, okay, what are we looking at? This, we've just had a big move down. Is that just a bounce to buy into? Well, these people who have bought it up from the 20-day moving average and sent the price up this far, I think it's a dip to buy into, and that new highs are coming, right? Above 85. The momentum dropped below this rising trend line really for the first time since August. So, you know, we're talking September, October, November, 2 and a bit months. So the RSI has showed sometimes what you look for is momentum to give an early warning signal that price is turning. And so momentum is weakened. It's dropped below this rising trend line. Let's just look at it again. Pretty well-defined trend line. 1, 2, 3, 4, 5, 6, 7-ish, maybe even 8 tests of that trend line. Drop down. Now it's retesting it. Now, it could easily just pop through to the top side. And that's probably the most likely scenario, actually. That, just had some relief, but now it's popping higher again. But what you can see on the price is that actually we did have this pretty major support through here. Even if you drew this line through these lows, we did close below this pretty well-defined resistance, then support, 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 close below it, right? So the fact that we closed below this fairly significant resistance and we dropped through the RSI are a couple of signs that maybe it could be an opportunity to sell into a bounce on the expectation that we get a much larger correction in oil. So where to do that? Well, some people have attempted it already. If you look at this was the kind of support, these through lows through here. On this candle, we had a kind of drop through it, and that's what brought about that kind of larger decline. The price has bumped up against this area a few times, sold off to the 20-day moving average, rallied back up to this area again. Here we're still stumbling up against it. So this candlestick here shows buyers are still there. And so for the market to roll over, these buyers need to be absorbed. And so a likely scenario, I think, is that maybe we get a little bit higher into this supply area here that caused this drop. And it potentially goes as high as this supply area, which basically starts right above it, which is where the price initially dropped down through these candles here. And you can see it tried to rally up through it, had a little island and then dropped down again. So somewhere in this vicinity, which is about 84, potentially where oil could roll over again. So this is a counter trend trade, but it's with a bit of evidence to suggest it could work. Otherwise, we bounced off the 20-day DMA. We have had a broken downsloping trend line here. So maybe the price is just getting ready to rally up through 85. That would be in keeping with the trend. And so, that's an entirely a possibility too. Here's the S&P 500, it's a 4-hour chart. You can see there's the old high. That's the broken trend line we talked about last week. And it's really just barely even corrected. It made a new record high. It pulled back neatly to the old high there. That was like a really textbook resistance becomes support bounce. So if you'd wait for the breakout to come back lower and bought at basically 455, the price is now 4,615. So you've made 60 points almost straight up. So that was a nice little trade. Obviously we're at the highs again now. Often the way we start these webinars is with the S&P 500 near its highs, and so it's very rarely at a buying opportunity as we start the week. And again, it's not really now, and so we're just waiting for a pullback. And if the current pattern is to be continued, that pullback would happen either at these closes or even these highs here. For the trend to bounce from resistance, turn into support, just like it happened here, but on a kind of smaller basis. And if it doesn't, then it's a sign of a bit of weakness in the market. I think an interesting situation will be if this big one, which what have we said? It's actually at 4555. If that gives way, then we could be in for a steeper correction of all this big bullish move here, but no reason to necessarily expect that just yet. Incidentally, we're now in November, and from a seasonality basis, September and October have historically always been the worst months. November and December are normally pretty good bullish months for the stock market. So take from that what you will. It's no guarantee, of course, that November and December will be good months for the market, but just seasonally they are, kind of going into the end of the calendar year, tend to be good months for the market. So that's obviously a bullish sign, but whether you can really interpret that to be the case when November starts and the market's already very bullish at record highs, if November was starting down here at the lows, you'd think, well, maybe I could, buy low into the Santa rally, but the Santa rally looks like it's come a bit early this year. So does that mean it can still happen in November, December? Well, quite possibly. It's a bullish market, but possibly not. And finally, of course, let's leave off with Bitcoin. I'd drawn this little high before as a kind of little flag pattern. You can see better on the 4-hour chart. That's acted as resistance, turned into support now, which is just below, let me zoom out a tiny bit here, just below this kind of major significant level, which I think is significant. You can see it's bounced off, the most recent price has bounced off it as well. So the market is kind of respecting this level. It seems like more or less it's holding. So we broke out to a record high just about. But sellers came in, obviously after that steep correction. People were basically selling once they got break even at the record high. So there's a bit of nerves around the old record high, but it seems to be stable in just what's a fairly modest correction by Bitcoin standards at the moment, just kind of testing the old high. If this area between these two lows, if we're down below here for a substantial period of time, then we could be in for a deeper drop back, and that wouldn't be a huge surprise, and it's not necessarily a reason to be any less bullish Bitcoin. But at the moment, this is actually holding pretty well, and we could probably expect a continuation of the move, and maybe even a move up to 70k for the first time. All right, that's it. Thank you very much for watching, everyone. Hope that was useful. If it was, please click the like button, and please make sure to subscribe to the channel so you don't miss next week's video. Thanks, everyone.